Good morning, everybody. Welcome to the Flow Show, Tuesday, the 3rd of February. And a bit of a disappointing week this week, it might be, due to the fact we're not likely to get any US data, at least from the government sources anyway, but we'll talk about that in a moment. Morning, Kate. Nice to wake up and come to a market. It's a bit quiet for once.
Morning, Ryan. Morning, everybody. Yeah, in a way, still some things or some instruments that can't sit still, but yeah, it's a bit of a quieter one. I think the market got a little a small cold shower, not being able to trade frantically over the NFPs at the end of the week. Yeah, for the rest, I guess it's kind of business as usual, right? The dollar is still doing pretty well.
Yeah. Well, I should probably describe it. It's nice to come in and not find another turd as hit the fan.
Or gold or silver $1,000 away, or 100 in the
Exactly.
latter, in case of the latter.
Exactly. Right, let's get cracking. According to a poll run by Kyodo, Takichi's LDP party is set to win a majority in the lower house. That will be the strongest performance she could get, taking a majority without the need of any other parties, coalitions, and whatnot. All the other bods have been coming up to continue explaining Takaichi's comments over the weekend. Economy Minister Kiuchi saying the weekend has pros and cons, and FX moves are driven by multiple factors. As if we didn't know that already. Katayama saying that Takaichi's weekend remarks on the yen were general in nature. The BOJ's Yendex has dipped back. We need to keep an eye on that. We're back under 75 at 74.61, so we're slipping a bit. I would say, though, that some of these moves are not solely down to pure yen weakness. It's what's been going on in other currencies as well that have probably been doing most of the driving. But keep an eye on that number anyway in terms of intervention risk. The good old RBA, they hiked rates 25 pips to 3.85% as largely expected. That came after they raised near-term growth and inflation forecasts, which show CPI still well above target. In the statement, they said the policy decision was unanimous, but the board will remain data dependent as the outlook and risks evolve. They say inflation picked up materially in the second half of 2025, despite falling from the peak in 2022, and the board judges inflation is likely to remain above target for some time. They said that the rate increase was deemed appropriate given these renewed inflationary pressures. Governor Bullock said the inflation pulse remains too strong and that we cannot allow inflation to get away from us again. The board will remain data dependent, so there's no forward guidance or predictions about further rate moves. They did not discuss a 50 pip rate rise. They won't rule in or out future moves, and it's unclear if policy is in a tightening cycle. So as much as they hiked and gave hawkish reasons why they may hike again, even as hawkish as she is, Bullock, she still tried to keep things contained in terms of future hikes. She doesn't want the market running away, getting too hot with expectations for further hikes, even though we're pricing one for May now. So not exactly mission accomplished. Kay, par for the course, really. On with the hike, given the reasons why they're going to hike, but
Yeah.
don't want to let the market get run away too far with it.
No. It's kind of as I expected yesterday as well. A hike and then going back to data dependence. I fail to see why the market would all of a sudden, because now some of the local banks are seeing two more hikes this year, and I don't know what they're basing themselves on. Okay, inflation is one thing. If it doesn't come down, there may be another one in the pipe, but I just maintain it's going to be dependent on the data, and I still want to see them take rates over 4%. That doesn't take away from the fact that I'm looking at the Aussie still in a bit of a positive light, just because it's now a high yielder. And what also pushes me to say that is that she was, or the statement at least, was relatively positive on the activity side of things. Even though if you look further down the line in 2026, they do look at a slightly weakening on that side, but it does seem um, that they are pleasantly surprised with current and really for the short term the growth outlook as well. So yeah, on that basis, I remain relatively positive towards the Australian dollar. But yeah, for the rest, Bullock didn't want to give too much, and I think with reason. They don't have to come out all guns blazing saying that they want to take rates back well above 4%. One thing I should point out, and that's a bit I find personally a strange one, is that the interest rate outlook that they are publishing is actually based on market expectations and not exactly on what the RBA board is expecting themselves. So when we see that rate expectation for the end of 2026 being at 4.2%, that's actually what the market was expecting going into the RBA.
Yeah, yeah, exactly that. But they'll also base it off where they see things. But you know, if they ever talk to the market, then they're in for a bloody nose, one way or another. But yeah, it's difficult because you know if you'd have said this a few months ago that the RBA would be looking to hike, I'd say okay, fine, it may be out there because inflation's still sort of coming down. A lot of people still in cut cycles, but over the last few months, there has been a pickup in inflation. It's sticking in the US, it's sticking in the UK. Even the eurozone ticked up, core still above target. So it is possible that a lot of countries, Canada as well, wherever you look, Sweden, other places, it is possible that we may have bottomed out in inflation, and we do see it starting to move back up again. I'm not talking about going all the way up to the highs we've seen, but it could just stay on the hot side. And that's going to swing the mood for central banks that we saw coming in the latter part of last year, where, people are getting hawkish over even the likes of Bank of Canada. Okay, so I think it's something we got to look for, that the RBA may not be the outliers here in going for hikes.
No, and then I guess we need to look at the in between brackets, obviously smaller central banks, those with an economy that is the size of the economy is obviously a lot smaller than the US and Europe, for instance. So they could be a bit more dynamic with their interest rates. I don't think that ECB is really looking at well, even if the Germans have said so, but if they are really looking at the next one is a hike, or if you look at the Fed with Walsh coming in, he's not the one who is going to press the hike button either. So yes, those peripheral maybe to the biggest central banks, they may be tempted to slide back into the more hawkish side, and then you think about the RBNZ who could go more hawkish in I think it's in 2 weeks or so that we have
Yeah,
the
18th.
right.
18th, yeah.
And then yeah, I don't know about the Bank of Canada because yeah, McClem is a bit of a strange one. If it would only depend on Rogers, yeah, they would be a lot more hawkish.
Yeah, exactly that. And yeah, I think that is probably the risk going forward over the next few months. The market turning a bit more hawkish over some of these countries and central banks, but we'll have to see by the data. But I think that's the potentially the way we're heading in terms of rate expectations generally. One place where we probably shouldn't be looking for hikes is over at the S&P. S&P's Schlegel says that the interest rates are currently, or interest rate is currently appropriate, where they are their next meeting, not until March. France, this gives you a reason why, or they're a bit of an outlier in terms of CPI, because their flash numbers came in for January. France CPI coming in at 0.3% year on year. That's a big move, down 5 pips. The Eurozone measure down 3 pips to 0.4%. The ECB's mandate is prices close to but below 2%. So these guys are well below and have been well below for quite some time. If the Eurozone as a whole was seeing these sort of inflation numbers, the ECB will be cutting again, without a shadow of a doubt. Now, this has been born out of what we've been seeing in the likes of the PMIs that we got yesterday and obviously the months before, where French firms have been cutting prices, even though they're facing inflation pressures from input prices. They have, on and off, throughout the last year or so, been cutting output prices to try and stoke up business. That's a big reason why you see these sort of inflation numbers. So the metric for the ECB and what they do next on rates is using France as a bit of a bellwether, if you like. Either their inflation is going to improve or their economy is going to improve, thus their inflation will improve and they move up with the rest, or the rest are going to sour and their economies are going to come down and their inflation is going to come down and they're going to join France. That brings the ECB rate cuts back into play. So if France goes up, then the ECB can stay on hold. If the rest come down towards France, they're going to start cutting again. Obviously, if things completely go the other way, then they might even start talking about hikes. But I think that's a long way away from that. But not good news for France. They'll be beating the bush, no doubt, soon about wanting more rate cuts. Going back to the data yesterday, we had manufacturing numbers out from Canada. They saw a nice improvement to 50.4 in that PMI. The final S&P Global Manufacturing PMI for the US improved to 52.4 from the 51.9 flash number. The ISM as well, with a bit of a gangbusters number, coming in at 52.6, moving well into expansion. Employment was less crappy at 48.1. Prices, it went up, not as much as expected, but still higher numbers. New orders, big jump there, nearly 10 big points to 57.1. Now, the only difference, or the only thing that didn't make this gangbusters report, aside from the numbers, and it can be a bit choosy, is that the respondent comments in that ISM, if you read them, you'd think, well, how has this number gone up as much as it has? Because they were all glass half empty, still moaning and groaning about the same old stuff, still saying that business isn't doing too well. So it could be that we've seen a bit of a, maybe an early year boost, a seasonal thing. Manufacturing, if it loads up, when it loads up, has been down in the dumps, sub 50 for a long time. We've only had brief moves above this 50 level. So whether this is the start of a trend remains to be seen, but it's good numbers, and good numbers are good numbers as far as everyone else is concerned. But let's see if that craps out next month. Kay, what did you make of that data?
A bit. What goes into the models? I don't think it's the comments. I think it's the data, right? So that is probably what we need to take away from that. I was, well, pleasantly in a way, or quite surprised about the solid uptick in new orders, right? Right up to 57. Maybe that's there's always an explanation to everything, right? That could also be people front running what's to come, and all of a sudden want to build up inventory before things get worse again. It's possible, but no matter how we turn it, it's a positive report, right? And as I said, that's what goes into money managers' database. It's just keeping together with everything that's going on now, if you look, and I'm talking purely about FX, it keeps the dollar bid on dips.
Yeah,
And it's
exactly.
good enough to keep it bid on dips.
Yeah, exactly. It's just another bit of good news in the pot. It shows the economy isn't rolling over. Let's see if the ISM services follow suit, because that's going to be the bigger one compared to the manufacturing number. But anyway, there's all the numbers there. Right, moving on. Can't find my notes. Fed's Bostic speaking on Walsh. Now, Bostic, he's buggering off at the end of February, so his comments don't really matter too much. But he said on Walsh that to have policy go in a direction you want, you have to build trust with the committee, show wisdom and guidance. He says it's a huge undertaking for Walsh. He's got a tall task. So that's pretty much his job. It's not just about getting in as Fed head and going, right, I want rate cuts. It's a committee. He has to make a case for that and hope then that others side with him on that. Everyone's still in the dark until we hear from Walsh, his first comments and what he's looking to potentially do. Right, so as mentioned, and just in case you didn't know, this partial temporary US government shutdown has kiboshed today's JOLTS report. It's kiboshed Friday's NFP data. So we are not getting those. However, if this thing ends today, because it could all there's some votes happening today, it could all go through and at least be passed in the next couple of days and we get clearance. It's possible that that data may just drop a few days later, maybe next week, rather than being delayed for months on end like it was before. However, it's not a done deal that all this stuff gets passed. There's still arguments going on, so it could still drag on for a bit longer, and then it's going to start impacting other data as well. And we're going to play the same old crap that we did last year. So there could be something that happens today. We'll have to wait and see later on. Trump, he's finally agreed to a trade deal between the US and India, whereby the US will charge a reduced reciprocal tariff of 18% versus 25%. The India deal was, I think it even beat the UK to be the first deal that the US did when Trump came in. Yet here we are over a year later, and it still isn't properly done. But it might be closer to getting done. Trump, he's launching something called Project Vault, in which he hopes to stockpile rare earth materials to the tune of 12 billion. This is according to him and his latest moves. That's what he wants to do, create this project to stockpile rare earths. We'll see how far that goes and where he's going to get those rare earths from in the first place. But 12 billion has been earmarked for that. On the Iran front, there's going to be talks in Istanbul on Friday. There's been further movement towards resolutions on nuclear stuff and everything going on over there. So that risk effect is easing, although Trump is keeping the threat well and truly alive with all his ships and whatnot in the area. But it is prompting Iran to come and talk and get around the table. So that may happen Friday, if not before. Trump also said that they're doing very well with Ukraine-Russia talks and may have some good news. Well, we've been there before.
There's been
full flat.
Hasn't that been for about a year that he said that there will be some good news? Good news coming. Good news is coming. Yeah, I mean the Russia-Ukraine talks are supposed to be held on Thursday, right?
Yeah, they're continuing or starting again on Thursday, maybe even Wednesday. I can't remember. Maybe even Wednesday.
Yeah, yesterday I mean to have seen Witkoff going to Abu Dhabi to talk to Russia and Ukraine on Thursday now. Yeah, gives us a nice end of week to look out for, especially for the precious metals again, maybe.
Yeah, exactly, and yeah, they're on the way back up again. It seems. We'll look at that in a moment. Well, anyway, that's it on the news front. Is anything else you got, Kay?
No, I think you covered everything, Ryan.
Good. So we've got nothing coming up this afternoon in the US. Apart from these little piddly numbers here, the IBD TIP Economic Optimism Index. Whoop-de-doo, we'll have to look at that. But yeah, no JOLTS today. That's been binned off for the delays. So a bit of a quiet afternoon. We're going to be dealing with headlines, it seems. Right, let's go and have a quick butchers at the precious metals because they're clipping up. Kay, what did you do in Blake's poll? Did you go for the 51 or the 44?
Right. Okay. I'm going to go in all honesty. On the poll, I voted for 5,100. And yesterday on Face, I said, well, let's go for 4,400. Because you said 5,100. So I am playing both sides. I
quote big enough to drive a
so
bus
I think
through.
we could actually visit both sides.
That's outrageous. I'm telling you.
But the thing is, I'm with Bran on this one. I'm so frustrated we won't have an NFP contest this week.
Yeah, well, I may still do it just in case it comes early next week.
Okay.
So I'll have a think about it. I'm in no rush, put it that way. I was going to start it today, but I'm in no rush now. Let's see what happens. But don't worry, we'll have a competition one way or another. Whether you even have to do it last minute, but we should know in advance. I mean, they should have the epoxy date. It should all be compiled. I mean, JOLTS should all be compiled. NFP should all be compiled. So it's not as if they can't get the data in. It's all ready to go.
It's of course it's ready to go. I think BLS is sometimes taking it from the lazy side.
Yeah, exactly. It's all procedural. It's all procedural. So yeah, well, no, we will have an NFP competition one way or another. Don't worry about that. Anyway, just looking at gold, creeping back up to that 5K level, which I think is where we're going to potentially see a test coming in. We've got a bit of a level around this 49.60s. I'm not going to say it's much of a level, but we've had on the way down, we had a little stop on up there on a bounce. So we had a little spike down to that level before around 48.50s. So I'm keeping an eye on that one. But I think 5K is probably going to be the first real test if we continue up. If we're busting that, then everyone's going to be. We're probably going to see the same thing, Kay. If we break 5K, we're probably going to get the short termers who got spanked on the way down thinking, oh, yeah, I don't want to miss this one. And they'll all start piling in again, and that will accelerate things up again.
Yeah, and there's maybe still a bit of that gamma negative in the market too. If we get back above 5K, where the main where some main expiries are, unless they have fully hedged it all, and when we don't want any more of this, because I mean option markets, especially in FX, but I guess it's kind of the same, especially in gold. Maybe silver is a lot less liquid, but in gold, you can hedge and hedge and hedge, and then the further down the line, stuff gets hedged. The more the importance of those levels and the short gamma gets watered down. So I suspect from last week that there's been a lot of hedging of the hedges already done, and maybe we see less of a dramatic move. But yeah, I've got some levels right where we stopped, around that 49.35.50. That's where we probably already going to see what it's made about, because it's also a bit of a zone of interest on the way up, on the way down. But yeah, I mean the 5,000 also always a bit psychological. I really I have to say I don't know where the next $100 will come from, because even yesterday we were on our way back up, and then we still got $200 of a decline all of a sudden before we continued to go up. Overall, fundamentals may have quieted down a little bit, especially on the geopolitical side, because there is this outlook for those talks on Thursday, talks on Friday. But if nothing comes out of there, I trust we are going to ramp up again in both of them.
Yeah, I think so too. I think so too. We'll have to see what happens the rest of the day. I think it could be key as to whether this one is going to go back up all the way, or at least. I mean, it's probably going to get volatile. Excuse me. I wouldn't be surprised if we see this sort of thing happening. You know, quite strong rather than this sort of grind up that we saw previously. So the volatility, I reckon, is still going to be in play for this one, pretty strong. So do be careful if you're trading this. You know, you're going to get some potentially big moves off of nothing in this one. Right, I'm going to have a quick look at euro dollar because that finally bottomed out last night around 117.70s. It bounced back to 118s, hit this little area here from 1820 up to this gappy break point thing. Couldn't get that far before it's pulled back. It's just gone back under 118 now, and maybe looking to test this. So this is a fairly decent range, you know, for a pair that's still got reasonably low vol. Vol's dropped right back now. We're just dipped under 6% in the 1 month vols. So you know, it could keep us contained between this area now. So really, I think you've got to look at this 1820s, 30s, and this 1880, 75. If we're busting either side of that, then that's probably going to be the direction that we go and move off in. This big level, 1744.45, was the real sticky point for quite some time into that part last year. We had breaks, couldn't hold. We had moves, tried to hold, back under, up, down, support resistance. So I expect to see pretty similar action if we get back down to that level as well. I'm keeping an eye on the old S&P. I'm still long a bit from the old Trump thing that we had a few weeks ago, and I think this is getting to a point. If we look at just at the cash market, we cannot yet crack this 7K level, and I think that's going to be important. I think we're building up. I think if we do crack it, it's going to be off and running, and we could see another decent leg higher. So I'm looking to potentially add to my trade, my long, if we break that 7K. But I need to see that happening in the cash market, not just it going on the CFDs that we can trade. Whether I stick a buy stop in or just play it manually, I don't know. But if it looks like that 7K is going for a break, I'm going to add to my longs because I think that could be a bit of a runner. But we shall wait and see. Quick look at dollar yen because that's up tapping the 156. Just looking around at some of these other yen pairs. Aussie yen is obviously off and running with the RBA, but the others, Kate, they're up, but they're looking a bit reticent, should I say? So yeah, as I mentioned, this we may be moving into yen weakness phase again, obviously with the elections coming up this weekend. But I think just at the moment, it's still the yen's at the mercy of what's going on in other pairs or other currencies.
Yeah, and this time it's a dollar thing, right? Where people are talking about sell America, maybe we're in a bit of a time zone where oh shit, I've sold too much of America.
Yeah, I need to buy some America back.
Yeah, I mean the dollar is ticking up at the same time. Yields are ticking up at the same time. The equity markets are ticking up. So there's a bit of sell America, but not too much. And I think it's safe of more data and trend determining or direction determining data. I'm a little bit of the opinion that it may continue selectively, but it may continue for a little bit, especially if you look at the FX pairs. And euro is obviously one of them. Sterling has done better because euro sterling is coming off, but its cable is still a bit lower, and also what was interesting today is post RBA, Aussie dollar can't keep the beat, and I think it's more of a dollar thing than really pure Aussie, because Aussie on the crosses is still doing relatively okay. We've also seen over the past sessions, even though Euro Swiss has come down now, dollar Swiss ticking up. So the dollar, it's a dollar thing really, and I might think that it may continue for a little bit until we see data or until we hear from Wash, if one or the other media can stick a microphone under his nose, as we've already been saying yesterday. So, yeah, I'm a little cautious here with the dollar, and because it could potentially go just that further.
Yeah, I agree with that. And yeah, Aussie Kiwi's looking interesting. I've been keeping an eye on this one.
Mm,
It's got every reason to continue going higher, I
mm,
think. But I think we need to look up at these highs because we just had the RBA and we just matched the highs from last week. Well, we beat them by a couple of pips, and we've had a couple of goes at getting up there, back up there today, which have failed. I don't think it's out of the woods just yet for in terms of going higher. But I think depending on what happens, if nothing happens before the RBNZ, I think there's a chance the market may get a little bit too hawkish. I don't mean expecting rate hikes from the RBNZ, but just maybe thinking they're going to get a more hawkish message from the RBNZ. And if they don't get it, then this might go and attack those highs. And I think that will be interesting. If we do that but can't get through, I might try a little short. But yeah, I don't know
I'm
if
a bit
this.
long again, and I'm just looking stupidly at that 115 2025, mate.
Yeah,
I
that's
bought
the
I
level.
bought some ahead of the RBA. I bought some after the RBA, but I let a fair bit of those go already. Um, yeah, and I see what you're saying, because we can't tackle the prior highs even with a rate hike. But to me, there's still enough interest rate differential for at least not shorting it. So yeah, I'm keeping that just. I mean, yeah, very simple. 115, 20, 25 there. That's my line. And goes below, I'm gone. And in the meantime, I'm doing as usual, long, taking bits off. Maybe if it dips again, putting it back on, and that's it. And I'm doing the same in Euro Aussie. I'll show you Euro Aussie because there's something interesting going on there, even though it has already come quite a fair way. But there's an interesting crossover of trend lines there, which I've been monitoring for a while, and we're trading below now. Yeah,
Yeah,
so unless risk turns around, that maybe that is going to come off a little bit more. But I'm rather looking at Aussie through crosses rather than the dollar, because as I said, I wouldn't be surprised if the dollar pushes on a little.
yeah. No, I certainly think it's valid buying dips down into this level. Though I'll be worried if we got a quick move down there after this bounce from it. But yeah, I think it's valid playing longs there. And as I say, if you find this level is solidifying like this level is down below, you can try shorts off of there.
Yeah,
And
and if your
just
long
play
takes
the
off,
range.
and continue to trade it until something breaks, right?
Yeah, exactly. Because it's got a decent. It's moving nicely within the range. There's pips to be had within it. So yeah, but yeah, I think you're right that the bias. There's no doubt in the bias is still very very bullish if you're looking at that. So there's no reason to change that thought from the longer term. Right, I'm going to pass it over to you, mate.
Okay.
Just Yao, is that you mean K or do you mean me? Because I have copies of.
Okay. Yeah, me, I think. Why do you have some symbols repeated in your list? Oh no, that's Ryan, mate.
Yeah,
Joao is
I do. I do that. I have just quickly. I've unshared it. I have charts for looking at the short term, intraday, and everything, and I have another chart that is the wider picture. It's not as messy. It has all the bigger, wider levels, 4 hour, daily, weekly, that sort of thing. It just gives me two different views. That's what I usually use it for, anyway. All yours, mate.
and I'm more of the messy guy who flips in between time frames. here and there. Can you stop sharing, mate? Ryan, you, thanks, mate. Okay, first of all, just a quick look because we had this RBA at what the Aussie dollar did, and
Yeah, got
you
it.
can see there. Okay, this is the daily one. We ran we that was yeah that was on Friday, right? Before we dropped, but we tried to run back up to the level and fell short. So that is something that is worrying is a big word, but it just reflects what's happening on the dollar, in my opinion. So we had this run up end of last week. Then today we tried it again, but we ran short. Okay, I still think it's positive because we are above that 79, 60, 65. But it's the reason, and also looking at the other dollars, it is the reason why I'm not doing Aussie dollar if I want to be um, positive on express a long view on the Aussie because of the dollar side of things. And Ryan already showed also euro dollar, dollar yen. They're all beat, okay. And there's no two ways about it. So I think unless this Aussie gets back above 73 quarters, then we can do a runner. But unless that happens, I'm going to be relatively neutral, even though the outlook looks positive, but I'm going to remain relatively neutral. And what I wanted to show, particularly on the Euro Aussie, is yeah, we had already quite a strong move lower. And if you look at the difference in inflation, if you look at the difference even in activity, if you look at the difference in the Aussie had a very good employment report as well. If you look at Aussie, Kiwi, they usually do well when stock markets go up. They usually do well when metals are going up, especially on the Aussie side. So we had a crossover of those two trend lines, and this is a trend line which comes back, and that's comes from August 2022. Okay, and we are trading, albeit not heavily, but we are trading a bit below here now. If we stick below, if we stay below this 168, call it 60, 80, 60, 75, which was also a high here, high here, high here. This could actually continue a bit lower, perhaps back into the 164, 165 even. But I'm going to keep a close eye on it. Just giving it a small try, see if it's really breaking. I won't refrain of just cutting it if it goes back above 169, but just shows us, even though there's already a big move done, that it is really on an interesting little level here. What can make it spike higher again, despite the RBA rate hike and a bit of interest rate differentials in favor of the Aussie, is risk. If we start to drop back in risk, usually the Aussie Kiwi crosses are getting bought, so that could drag it back higher. But this is something interesting. I thought. Um, what else am I showing today? Well, just a quickie. I this is a wide range, okay, but there is a potential for me at least, but we can't really narrow it down. Yes, there are inside levels, but maybe, just maybe, and that then coincides with perhaps a range in the Aussie dollar somewhere between 4400 and 5100. Silver, I know it's a $30 range, but could start to, in my opinion, maybe start to form a range here. We know about the volatility, but also, and I think around 85, 86 will be a bit of probably a bit of a pivot level inside a range that we may start to form. Let's see if the volatility starts to quiet down, and then we can look maybe a bit more in detail on inside levels, which are 90 on the top side, 96 before we get to this 99 and a half up to 102 perhaps. And on the downside, we could perhaps start to look at 81, then 75, 76, and then of course ahead of the big one, in my opinion at least, which is going to be 69, 71. I just was looking at it this morning, and if we see enough volatility in this one again, I may just start to think about trying to trade this range in with very light positions. Oh yeah, cable was quite interesting yesterday on the rally in the dollar yesterday when it started, and actually euro is not far from its lows. Cable all of a sudden halted at 136 and a quarter, which is right on this broken trend line, which is an interesting retest that we had of the trend line, and then we started to move higher again, which in turn dragged or maybe it's euro sterling dragging cable back up. I leave that in the middle, but that's an interesting one. So I think if we get a retest of 136 and a quarter, I kind of think that it may be interesting enough on the day here. If we start to go back below 135.90 figure, there's probably going to be a deeper setback. The dollar doing much better across the board, but I think this level is rather interesting. Euro Swiss, uh, we thought yesterday that we may start to move back above 92 and hold above 92. Even had the looks of could they be there? Like SNB's case, but then Schlegel again killed the move yesterday, saying that it's going to be a big hurdle, but they to get into negative territory. They may think about it, but there's very little he gives away at least on potential intervention. So what happens is that this morning we're already trading back below that level, and it's 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 still not one that where I'm really inclined to start picking bottoms again. It's just I want to really see a hold above those levels here around 92 figure 5 and hold it to start to think that we may move higher again. It just seems that the market has given up on Swiss rather than buying it or trying to go and test the SNB. I don't know, but it seems the market has just given up on what's happening in Swiss franc right now. And I'm just looking through. Uh, could people be rotating out of PMs and into equities, crypto? Mark, I'm not a specialist in crypto. I'm seeing those levels. I just saw that on the last run up, the last shot up in precious metals. Um, Crypto has not participated. And when the metals came back down, crypto has come back down again. I think we will have to wait and see for rebalancing. I'm not 100% sure how it's going to work out once we will hear a bit more from Walsh as well. Perhaps he has an opinion because Trump has a very outspoken opinion. Has he got himself an opinion? We don't know, but I'm really I don't know what's been clear though is that the run up in crypto to me, and then you look at the last run up in gold and silver. If you compare it to the sentiment that was in the market then about uncertainty around tariffs, uncertainty about geopolitics, uncertainty about whatever you wanna call in the world, is that crypto is still for me a much more speculative thing than a store of value, because the
It,
store of
it
value
could
with
it could be people taking profits in crypto to pay for losses in getting spanked
absolutely
in metals.
yeah, and the opposite. When gold crapped out of the bed over $1,000, people having to cover losses in the precious metals by selling some of their crypto off. So yeah, both may have dragged one and the other down. But I think in this last run up that we saw, even in the steady run up, crypto had done the move before, right? Crypto done its high before gold and silver had have put their highs in play, and that to me tells enough of a story already. Back over to you, Ryan.
Thank you very much, mate. Good stuff as always. Thank you, everybody, for coming to the Flow Show again today. Do take care. Hope you have a great day's trading, and we'll see you all bright and breezy tomorrow if we don't see you on face later on. Have a good one, everyone.